This is inflation under 300 seconds. Are you ready? Let's unpack this fundamental economic concept. Inflation is like the gradual increase in the volume of background music in a cafe. Over time, what you could buy with $1 becomes a little less, just as the music becomes a bit louder without you immediately noticing. Simply put, inflation is the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. Consider this everyday scenario. Last year, your favorite coffee cost $3, but now it's $3.15. That extra 15 cents reflects inflation. It's measured as an annual percentage increase. In this case, the inflation rate is 5%. But what causes inflation? It's primarily due to two factors. One is demand pull inflation. Picture a new phone release with limited stock. More people want it than can have it, driving the price up. Similarly, when the demand for goods and services in an economy surpasses the supply, it leads to higher prices. Two is cost push inflation. Imagine if the cost of coffee beans or milk rises. The cafe might hike coffee prices to maintain their profit margin. This type of inflation happens when the production costs of goods and services increase, and businesses pass on these higher costs to consumers. There's also a third, more nuanced cause, known as built-in inflation, which is tied to the expectation of future inflation. If workers expect prices to rise, they demand higher wages. Businesses, facing increased labor costs, raise their prices to maintain profitability, creating a loop of ongoing inflation. Central banks, like the Federal Reserve in the U.S., keep a close eye on inflation. They aim to maintain a healthy inflation level, balancing the need to encourage spending and investment, since a little inflation means money loses value over time, against the risk of too much inflation eroding purchasing power. They use tools like interest rate adjustments to manage inflation. Inflation impacts almost every financial decision, from personal savings to business investments. A low and stable inflation rate is often a sign of a healthy economy. This has been Inflation Under 300 Seconds. Stay informed, make wise financial decisions. Stay smart, invest safe.